Hello guys again. Sorry for the interruption. I have sorry for the interruption. I have some problem with the software, so sorry for that. So as we said, Trump said if you look at weekly or monthly, it's too extended. So for me, as you might know, I don't use monthly or weekly or yearly chart. Swing trading or short-term trading, it is about daily trading. So let's write something to the guys. Sorry, because they should know what did happen. Sorry. Software disconnection. Okay, so as we said, so thank you B-Boy C. Claire. He says, I was the first to attend. Thank you very much for attending on the first time. And we say, but accumulation stage is less technical terms. Now, accumulation is something technical also. It is just a word. What we mean by it, it means some people are buying for going long. Some people are selling short. It means they bet that the market will go down. Others, they bet that the market will go up. Okay, this is what we say accumulation, because accumulation is just a word meaning that there are a lot of shares bought and sold everywhere. Now, Trump said the big fund managers are selling so heavily if you see big tech. Now, big tech technology stocks, as we can see, we will go to them and we see what's going on in terms of price. Okay? We try to see just the price, because if you go and you begin following what we call the you try to go and follow the searches and the reasons why, you will get trapped into what we call for those people who always want a reason. Sometimes there is no obvious reason. Okay, let's say a big mutual fund, he has stocks in this technology stocks, and he has been holding them for 1 year or two, and now he will sell them. So this doesn't mean that these stocks have problem or whatever. So for me, I don't base a lot on news, because I am not a day trader. Okay, you should understand that. If you are a day trader, yes, each day there are some news for some companies, and you should follow this in order to find ways to make money. Okay? So this is, and it is not, as he said, managers are selling heavily. It could be hedge funds are selling heavily. It means selling short heavily. If the other guys, mutual funds, are going to short, it will to sell off, it will be a big problem. Okay, so let's continue. And so hello James. He said, hey, what do you think of Robinhood? Okay. Hey, James. First, we try to understand what you say. First, you say, what do you think of Robinhood? Robinhood is a broker, but it is an app. Okay, it means you are using your smartphone to use this app. It's a broker. It means a broker like any other broker. Now, you said you always mention swing trading. How do you trade stocks during the swing or after hours? I tried using Robinhood and told me I could not. No, I have never told you to trade after hours. Why you should trade after hours? So at least you will understand. Now, James, I will explain first your question. What do you think of Robinhood? And then I will go and see this after hours. Okay? So, and we have another question with Jalen Rose. What are the best trading signal indicators to use for swing trading? Okay, Jalen Rose, please just wait for a few minutes. I will explain for James. He said, what do you think of Robinhood? So let's go to the explanation. Okay, so I will just give you an idea of Robinhood. So if I am wrong, please correct me, because I didn't use this broker. Okay, so let's begin. So we say Robinhood. Okay. Now, Robinhood, they say no commissions. Okay? No commissions. It means you don't pay commission. You buy, you sell without commissions. Now, my question to you, here is my question. How Robinhood makes its money? Okay, so Robinhood is a platform, is an app. It is a broker. It is a business. The business should make money, and we know that when there is a broker, it needs commissions. Now, since this Robinhood there is no commission, my question to you is how Robinhood makes its money. For me, I will not try to answer this question. You should search by yourself. This is the first thing I tell you. One, you should find your answer by yourself. If you think that someone will give you a platform and you buy and you sell for free, you see that it for free, it doesn't. There is no free for brokers. This commission, they say don't pay. Yes, it is. But ask your question, how Robinhood makes its money. Because if Robinhood doesn't make money, this business will fail and it will be out of business. So ask yourself this question, how Robinhood makes its money. Second thing I want to tell you, the second thing is, do you have what you call bid and ask? Okay? Now, this is very important. So I will go and check James and we'll try to ask him, do you have bid and ask? For what I know, they give you only, for example, they say Apple, you want to buy 100 shares. Let's say, just an example, okay? Let's say it is 172.45. Just an example, okay? Now, and you say here, for example, buy. Now, this window, as you can see it, you are buying 100 shares of Apple at $172.45, and he say buy. Now, what is wrong in this screen? What is wrong with it? Now, for me, what is wrong with it is this. What's this number that he gives you? If it is the ask, now, where is the bid? It means if you buy at 172.45, at how much you sell if you want to sell. Okay? So if there is no bid, it means there is a problem in buying and selling. You can buy, yes. You can sell, yes. But when you buy, you don't know how much you sell. This bid is very, very important to know. Okay? So let's go to Jamie's. And let's maybe he could answer us about this question. So he said, I heard they make their money from the interest they earn on your money that is not invested. For example, you get paid a dividend and it goes to your Robinhood savings, which pays you 0. Yes, but Jamies, when you get don't understand me wrong. Let me continue your answer to the first questions, and then we go to this question, because you have too many questions. Okay, now let's go back, and you say to me, how do you trade stocks during swing or after hours? I tried using Robinhood and it told me I could not. So Jamies, the first thing I'm telling you, do you have bid and ask, yes or no? I know that there is no bid. There is only the price of the stock. So have you thought why Robinhood just give you the ask? Ask, it means what the market maker wants. But if you want to sell, did he give you the number? So this is just a question. You answer it, please, while I'm trying to explain this swing trading during the swing or after hours. This sentence that you say, the question is wrong. You say during the swing or after the hours. It's not like this. You mean during the trading hours or after trading hours. Okay. So let's go back. Let's go back and explain again. Okay. So not open. I'm sorry. Okay. So let's go and check. So for trading hours begins from 9:30 a.m. It goes to 4 p.m. This is the trading hours. All this, a lot of millions of people, they come here, and this is called trading hours. It means where the market is very, very active. Trading hours. Okay? Now, in the morning, here in the morning, it is before trading hours, and after 4 is after trading hours. After. Now, for me, I don't trade in this time before 9:30. I don't trade here, and I don't trade here. So I don't know why you are saying after trading hours or before trading hours you could do swing trading. Swing trading has nothing to do with before or after hours. Now, for me, it's here. The time is here. From 3 p.m. to 4 p.m. this time, we buy stocks after we search. So this is how we search for the signal. This is where we find the signal that I will be speaking about in this session. Signals. And I will explain later what is the signals. Okay? So let's continue. Okay? So this is your first question. Second question, you say the reasons for there is no commission is that Robinhood, you say, I heard they made their money from the interest they earn on your money that is not invested. For example, you get paid a dividend and it goes to your Robinhood savings, which pays you 0. And then it means you have dividend, and then he takes this dividend and he uses it for interest rate. It could be, but most of the time, when you have, for example, $50 or $100 in each 3 months or 6 months, you get this money. It goes directly to your account, and when you buy stocks, you are using them. So this, I am not sure that he makes money with this kind of thing. Okay, it could be, but it's not a big deal. Now, another thing, let's continue with Jamie's. Please, Jalen Rose, please forgive me. I will try to finish with Jamie's, finish all his questions, and then I stop, and then I come to you again for your question. So stay with us, it will not be that long. Okay, second, he said, I have never purchased any stock using Robinhood yet. I was just curious because of the free trading. I was interested in buying Ford because of the nice dividend. On the price looked good. Okay, Jamie's, first, you are not aware what is dividend. Okay, I think that you have no idea, although you have an idea that you make money from the stock. But the problem is that you don't understand what is this dividend. Okay, so let's go and explain to you this dividend. Okay, at least you will have an idea, and then we can go ahead. Now, let's take let me see the stock Ford. Ford is $11. $11 Ford. Okay, so let me see how much is Ford. Okay. The dividend yield is 5.42 cents a year. Okay, 5.42. So let's explain here. Ford, this is the company. Okay, and it gives a 5.42 okay percent as a yield for a year. This is for the year, and the price is $11.08. $11.08. Okay, so this is Ford. Now, 5.42% is taken from $11 minus this 5.42%. Okay, and what is the result here? It means the money that you get here. This 542 is called the dividend. So the dividend is cut from the price. It is not as you might think, as you have read, that the money comes from the company itself. This is the company, which is Ford. Ford will never give you a check. Okay, a check from the earnings of Ford, the real earnings. the real earnings, because we have two earnings. Okay, the real earnings. These real earnings, you will never see them. What you see, the check, is from the price of the stock itself, and it is cut 5.42 each year from this price. So you think that a dividend is from the company earnings for real. You think that it is real. It is not real. Not real. Because it is not from the company itself. It is cut from the price in the stock market. So here is the thing. Just to show you that we have two kind of earnings. Earning here, earning, which is real, and we have earning that it is from the stock. Earning from the stock itself. So 1108 minus 542. 542 is minus your stock. So 542 is the dividend. So the dividend is not from the real earning from the company. The real earning of the company you will never see. You will never see. It will never give you the check. The check is from here. This is the check. The dividend is, this is the check, is taken from the price, the real price of the stock. It has nothing to do with the real earning of the company. Okay? So the real earning of the company, okay? Who takes this earning? It is the employees. It is executives and employees. For example, employees, if you have, for example, 401k. Now in the 401k, if you put, for example, $100, they match it, for example, let's say 100%, they match $100. Now, from where do you get this $100, which is not from you, not from your paycheck? So this is the real earnings of the company. This is something that it is given from you, from the profits of the company, and it goes to your 401k. So this is real from the earnings of the company. Although you, as an employee, it means, let's say you work on this company, Ford. Let's say you work for it. You are a worker. So you are getting $100, although you don't have no shares at all for Ford itself. No shares. It means you don't have any shares. You don't buy Ford. Although you are getting money from Ford, although you have no shares. So the dividend that we are speaking about is here in the stock market. The stock market has nothing to do with the company. This is here is called stock market. You are speaking about the stock, and here you are speaking about the company. So a lot of people, they don't differentiate between the two. This is my explanation, and hope you understand. I have training level 16. If you go to it, it's called How to Invest in Dividend Stocks. Training level 16, if you want to go to it, it will explain to you everything about the difference. Okay? So, let's go to our questions. So you said, I have never purchased any stock using Robinhood yet. You can, for example, the best thing is to try it. Now, when you try it, you see what's going on inside, and you can search why there is no commissions. For me, I'm not going to tell you you should search deep until you find, because I don't want to give opinions about brokers that are good or bad, so I'm not doing reviews about these brokers. Okay. So let's go back and go to Jalen Rose. Sorry, Jalen Rose, I was explaining all with Jamies. Now let's go with Jalen Rose. It says, what are the best trading signals indicators to use for swing trading? So Jalen, if you are following me, you should use my own criteria. They have nothing to do with indicators. So I will explain. Okay? I will explain. Now, we are speaking about signals. Signals, it means the momentum, when to buy, the momentum. Okay? Now, for me, I have my own signals according to criteria. I have criteria, 2 criteria to use, and there are other criteria about the chart. Okay? The chart. Now, all these, you can see training level 2, 3, and 4. Okay? Number 1 is free. Training level of 1 is free. It is on my website. You go and you take training level 1, which is free. Now, if you want to know my 2 criteria of search, and to know other criteria of the chart, you should see training level 2, 3, and 4. Or if you want to save a lot of money, you can go to do either silver. You have all this 1, 2, 3, 4 silver subscription. If you want, or you can go to golden subscription, and you find 10 first training for free, and you find everything as basics, everything that you need to for trading, swing trading. So from this information that I give you, okay, I don't use no indicators. It means I don't use indicators as other people do, as other other teachers or other people who are training people. I don't use indicators. So you don't have to have indicators in your chart. My chart is always clean and simple. So there is no indicators. So what is for you? Either you can go and do silver. We have only 4 training for free, which is the criteria for search to give you the signals or the momentum. Or you can say the golden. Most of the people, they go with the golden because it has 10 training for free, and we have the search and we have the lessons. Okay? So this is the difference between what I do and what other people do. And there is no indicators. It means I don't use indicators in my chart. Okay? So this is for Jalen Rose. And please, Jalen Rose, you can, for example, you can check my website. Okay? You can check my website, and you can see my email is always my email is always in the here is my email. It's always in the video. Wherever you go to a video, you find my email in my website. Okay? If you have questions, just ask. So let's continue. Hello, James Armstrong. Thank you for coming. Hello, Artkov. Thanks you for coming. Let's see your questions. Now Jamie says, okay, I was confused about what the definition of swing trading was. Thanks for clarifying. Okay, Jamie's, what do you mean by swing trading? Just I explain to you before I go to other guys who are asking other questions to understand what is swing trading. Okay, so let's go and explain this before we go, because we should make it clear at the beginning. When you are answering questions, you are asking questions, it will be all clear. Okay, so we try to see what is swing trading. Now, swing trading, it has another name. We say short-term trading. Short-term trading. Now, what does it mean? It means when you buy a stock, for example, at $20, you can stay many days or many weeks or many months. All this is called swing trading. It means you are following trends. That's why this is the trend. It means a stock is going up, or it could be a stock which is going down. So either an uptrend or a downtrend. Okay? Uptrend or downtrend. So this is what we call swing. Now we say swing because most of the stocks swing. What does it mean? It means they can go up for many days, weeks or months, and then they go down. Okay, so they swing sometimes and they go up again. So this is called swings. So for us, what is our job is to find where to buy and where to sell. This is swing trading, and this is what I teach. I teach swing trading. I have some about day trading and about investing, some training, but mostly I do swing trading, okay? And this is called a short-term trading. But in months, it should not exceed 1 year. It means it should be less than 1 year. Less. You shouldn't go for 1 year, more than 1 year. Because if you go more 1 year, this is called position trading, or it's called investing. It means you stay longer. That's why we don't see the company fundamentals, because we are not investing in this company. So hope this is clarified by this explanation, and then we can go and see other questions. So Trump said, should we give up IPOs in bear market or heavy sell-off? No, see, you want to make a rule, and this is the mistake. Let's say the stocks have been, the mood of the market is going down and we have small correction, but doesn't mean that all the stocks in the stock market are going down. No. So why you are going to make a rule? It's not white or black. The market has colors. Okay? So this is just to give you an idea. Don't make rules to the market. Don't try to say, for example, okay, the whole the Dow is going down. It means that all the stocks are going down. IPOs are going down. This is not true. So don't, my suggestion, or what you call my idea, is don't make rules of the market. What if the stocks, some stocks are going up? Okay? You will find stocks going up, and this is why a lot of people, they use my strategies, because it shows you stocks that are not following the whole market. And that's why we are doing swing trading. Swing trading is finding other stocks that don't follow the market. If it is going up, yes, you will find a lot. Now, when the market is going down, you find few and little. But still, daily you find stocks that are going up. You find gap ups. Okay? Because of the news. You find the trends up. I just showed last time, I think, a stock that it is so good that's going up. It has never had this correction. The stock has never seen this correction that the whole market is speaking about. It hasn't. So you see, the big thing is where you are in the market. For example, you go, for example, on last week. Okay, go and check, for example, for the gap apps. Okay, you will find a lot of gap apps, and daily there are gap apps. We have gap downs also. So the reason is the traders, when they trade, they don't care about the market. Okay, it doesn't mean that when there is news in the market, you go just and you short the market, or you short stocks, and the stocks are going up, so you will be losing a lot of money. Okay, so, and another idea about IPOs. When we say an IPO, it is a new company, but how many months? Trump. When you say an IPO, how many months? 1 year, 2 years, 5 years, 10 years. All these are called IPOs because they are new companies in the stock market. Now let's continue. Rahmatullah Modi, how are you, Rahmatullah? Thank you for coming. Ricky Kabadila, CFD. Let's see, he said CFD is good to trade. First, Ricky, understand that CFD is not a stock. It is just a virtual thing. Okay, so it's not a real stock. So you don't own. Let's say, for example, you buy a CFD about Facebook, or you buy a share in Facebook. What is the difference? The difference is that you buy Facebook share, it is real. Now CFD, it is not real. Okay, it is other markets that they can't reach. USA market, they can't reach that, so they create these things which are called CFD. And here in America, we are not going to trade CFD. Why should I buy CFD when we have the stock? So you should understand the difference. Okay, if you should make sure that you understand the difference. Another thing, you can't buy half of the share. For example, you in the CFD, if you go to buy Google and you don't have money, you buy 50% of one share of Google. It didn't happen here in America. When you buy one share, if it is 1,500, 1,500, it is 1,500. You can't divide a share. So you just get the idea and you understand the difference between CFD and a stock. Okay. Another question of James Armstrong. What first got you interested in the stock market and to start trading? Yes, this is a good question. No, for me, in all my life, I like business. I like things that are related to business. No, I just like. But at the time, I don't understand. I don't understand the stock market. I thought this is the first idea that I get about stock market is that you buy shares of a company, you leave them, you make money. Okay? And you can make a lot of money. So this is the first idea. And then I discovered that you can, in a day, or in a day, which is called day trading, you can buy and sell, you can make money. So this is another idea. But the main thing that makes me like a challenge to trade is one question that I was trying to find an answer, but I read books, hundreds of books, investing, trading, day trading, but I don't find the answer until I find it by myself through my trading, and then I change to swing trading. The question is very simple. Okay, I will write it for all you guys, because I have done these questions many times, and hope you have, maybe you will ask the same question. Okay, so the question is very simple question: why a stock, okay, go up or go down? Although this question is very simple, but it is so deep. If you know the answer to this question, you can make money. You can make money in the stock market. If you have no answer why the stock is going up or going down, okay, you will never make money and you lose money instead. So this is the major thing that gets me attracted to the stock market, and it is a business. It means it is making money online. This is the best thing that I was thinking about always. Online. It means you don't need, okay? It means you don't need to go outside your house in order to make money in the stock market, because with the internet, okay, with internet and with the brokers, they go to internet, everything becomes so easy. Now, like you see apps, you find broker in your cell phone. It was so easy to buy and sell. But here is the thing: although it is so easy now in terms of internet, of technology, just to take the app, you search, you buy, or you sell. It's very easy. But making money is the same problem for 100 or 200 years, or even 500 years, when the stock market has begun in Amsterdam, in Belgium, okay, in the, I think, 16th century or 16th century. It begins with two stocks. It's the same thing. The problem is that you should understand how the stock moves up and down. If you understand it, you can make money. If you don't understand how things work, you will struggle all your life, and this is the problem. Okay? Hope James, I answered your question about my interest. And for me, the stocks is a passion. It means I like to buy and to follow stocks to make money. Yes, I can lose some money, yes, because it's part of the game. But I see gap apps. You know, it's so nice when you just buy a stock today. Tomorrow there is news, and then you see a gap app. You see $15 or $20 or $30 or $70 in each share profit. That is big, you can see. That's what attracts me to the stock market, and I want to specialize. That's why I specialized in swing trading, because it is easier than the other ones. Okay? Easier, it means at the end of the day, I buy a stock or two or three, whatever I want to buy. And then if the next day is good, I will hold for many days, many weeks, many months. I don't have to wake up in the morning and follow the market at 9:30 and begin to struggle with all the professional, with hedge fund, and to find the direction of the day. Okay, that makes me, although I traded a lot as a day trader before, then I stopped doing that. I just go to do swing trading, and it is better for me because I have a lot of time in my hands, so I can do whatever I want. This is what makes me go to swing trading than to go to day trading or investing. Investing, it is a long thing. You can throw you buy some companies, you throw them in an account, and you leave them for 5 years or 10 years or 20 years. Okay, this is investing. It means you choose the companies that you like, that you see that are robust, that are making money, that they can expand, they can crush the other competitors. Okay, that's investing. But you should have a long breath. It means you stay many years in order to see the results. It could be good, it could be bad. Because time doesn't mean that when you buy a stock for many years you will make money. Sometimes you lose money. So always there is a risk. Now let's go and continue with questions. Let's see here. Okay. B-Boy C. Claire, he said, what trading platform do you use? I have been looking for months for a simple one. I am using Robinhood currently. Now I ask you, since you are using Robinhood, I ask you, do you have the bid and the ask in Robinhood, or do you have only the ask? It means the price of the stock. Please, B-Boy Claire, C. Claire, please try to answer my question. It means when you want to buy a stock, do they give you the bid and the ask, or they give you only one price? Now for others, you can choose any big broker. Try to see just the commission. For example, for me, right now I am with E-Trade. But the price is, for the new guys, it is $6.95. You should trade a lot in order to become like $4.95. So, because for me, before I was with Option House, it was so cheap. It was, right now I'm paying only $3.95. Because I am an older customer, and they keep the same price, and understand that E-Trade is big, it buys Option House. So now if you put optionhouse.com, you click that, you will get to E-Trade, because Option House doesn't exist anymore. It was bought. And there are some bad things about E-Trade, is that there is no virtual account. Okay? Because the bigger brokers, they don't care that much about people who are beginners. Because if you have what we call a virtual account for free, they don't want to have this virtual account, because they deleted it. It was very good before with Options House. They have two accounts. One which is virtual, you can play with. They give you even $1 million just fake, and you can trade, you can do whatever. And you have the real account. But later, when the E-Trade bought Options House, so there is no, yes, they deleted it, and there is no, and they changed the price, I think, to $6.95 right now. But if you trade a lot, they will take it to $4.95. So if you ask me, what are other brokers? There are a lot. Just put in Google big USA brokers. It will give you the big brokers, and see their fees, see their commissions. Okay, and then choose one, and that's it. Okay, now let's go to another question. Kate Cola Min. The question is, how much profit you did in 2017 in your stocks. This is a private question. I can't answer you how much I made. But I made around 62% last year. So this is what I made. Okay? But how much is it? You want to know my account? No. This is just a private question. It doesn't help you in, for example, in your trading. Even if you know, it doesn't help. So knowing it or no, it doesn't help. And thank you, Kate Cola Min, for asking this question. Big Boss getting it. Are we in a bear market starting Monday? Big Boss, no. I will tell you why we are not in bear market right now before I answer other questions. Okay, I will just please stay with us. I will show you with the Dow Jones in general what does it mean if you are in a bear market, because a lot of people, they don't understand a bear market. I will show you the signs. So let's go to the chart. Okay, so let's go to the chart. As you can see here, Ford. So we will take Ford and we will put Dow Jones 30. Okay. Now, this is February. Just I make lines. Where is March? Okay, this is March. Okay, this what we see here in the middle. This is I work it. Okay, this is here. What you see here, all this is January. Is February. This is March, and we try to go to April. Now, this is the resistance line. It means the highest price that the Dow Jones has reached is here. This is the lowest. It goes in February. This is here. Now the Dow Jones goes down. It goes up. It goes down. Goes up. It goes down. Goes up. If it hits this support line, it goes down. We go to another correction. It could be a bear market. But right now, Dow Jones is trading into a range. A range, what does it mean? It means the stocks of Dow Jones going up, they stop, they're going down, they stop, they're going up, they stop, going down, they stop, up, then they stop, then they go down, they stop. It means if they continue here and crash and cross the support line, it could be a bear market. But we will be waiting for this, and we see that. If it goes to a bear market and goes down, we can short the whole market. Okay, we can short the whole market, as you can see. So this is just in general. Now another question about Javid Iqbal. He said, hello Karim, what you think of instead of buying 100 shares of a stock, buying deep in the money one contract of option which moves 1 to 1 in relation to stock price, and thus avoid investing large price. Now Javid Iqbal is speaking about options. Okay, now let's go to explain this, because a lot of people they think that Wall Street guys, when they create options, it means they give free money to the people. So options, okay. Now, I give you just an example for those who don't know options. Now, let's say if you want to buy, just an example, okay, 100 shares okay, 100 shares of a stock, let's say Facebook, just an example, okay. Facebook, let's see what is the price for today. Okay, let's see. Let's see the Facebook. Okay, 159.79. 159. Just an example, okay? So if you want to buy 100 shares and the stock is 159, so you will be spending $15,900 to buy 100 shares. Now in options, let's say an example, okay? Let's say you buy a call. Let's say we say $2,500 for the contract. Okay? Now I will just explain I will explain this idea of why we have options. Now, options, it is a product that it is created by Wall Street. Wall Street guys, the main thing they do in the market is to get money, free money from all the participants without having risk. We risk, they don't risk. Okay? All the participants of the market risk their money. For example, the broker doesn't risk. You buy a stock, you sell a stock, he has commissions. If you use his margin account money, you pay interest rate. So, does he risk? No. He is out of the market. Doesn't risk. It is you and I who risk. Now, what is this? What is this option? He said, for example, here that if the stock moves $1, the option moves $1. This is not true. This is not true. If you go to take my training, which is training level 14, how to trade calls and options, you will understand that it is not 1-for-1. So let's go and explain more. Now here, why do you think that they give you Facebook 100 shares, all this 15,800, they give it just for 2,500? Why is that? Have you ever thought why the contract is so cheap compared to the 100 shares? So for me, for example, when I want to buy 100 shares, I pay 1,500. Now you come with 2,500 and it is the same as me. So what is the trick? What is the trick? Now, I will tell you the trick. This 2,500, the risk that you are risking is 100%. It means if you are wrong, this $2,500 could go and become $0 or become $10 or become $100. Okay? Because the risk is too much in options. This is the trick, is the risk. Okay? Now let's say, for example, Facebook is 15,900. Let's say my risk in this trade is $1,200. This is my risk. Here in Facebook, when I buy shares, I control risk too much. I control the risk. I have an idea on how much to exit. But here, $2,500, if you will never know how this will go up or go down. And this idea, if the Facebook goes $1, the options goes with $1. This is false. It could be that the stock go $1. Here it goes 20 cents. So don't try to think that it is the same. Okay? Because if the stock goes $1, it goes $1 up. If it goes down $1 down, all the people will do options. They will never buy the stock if it is like this, because this is an advantage for the options. But the advantage, the options, it gives you an advantage to buy cheaper, but with a high risk. Now, what I'm explaining now, most of the time you don't find them in the books, because the books speak how good is options, but they don't speak about the risk, and you can risk all your money. I will give you an example. In order to understand what I am saying, let's say you have in your account, you have $20,000. You find a stock before the news, whatever, let's say it is FXM, let's say a stock. You have $20,000. You buy calls with this. Let's say you buy 10 calls, and 10 calls is $20,000 that you have. All your money. You buy 10 calls of this stock. Now there are the news. Tomorrow, instead, you think that the stock will have a gap up and you make a lot of money, but instead the stock has gone, let's say $8 down. Any stock, okay? It doesn't matter how big is the stock. The stock has gone down $8 down, and this 20,000 you will find only 1,500 in the morning minus, and we have a gap down in the stock. Now, when you ask yourself why you have 1,500 and yesterday you have $20,000 in your account, this is called options risk. Options risk. Now, if you are going to play with options, you should have advanced risk management. Advanced risk management. It's not easy. It's not as you might think. It is so easy. This is just an example. It could happen other things, but I will give you the worst thing that it can happen. At least you get an idea. Now, if you buy a stock with $20,000, the next day it will never be 1,500, because okay, even if you have a gap down $8 in this stock, you will never have $1,500, because the options will do what? This option, it will kill all your money, because how it moves is calculated differently from the stock. So your idea that if the stock moves $1, the option moves $1 is false. Please try to check this. It's not true, and if you think it is this, you will ruin or you will wipe out your account without knowing. That's why I told you you should never do options when you are a beginner. You should first make money in the stocks, and then when you are good, you can go to the options and calculate your risk and then begin with options later, not now. Okay? So this is just an example. So hope you understand this idea of options. Okay? Now let's go to another question. I see a lot of questions, so let's go very quick. So Javid Iqbal said, and avoid large loss if stock overnight gap down like Facebook did, while in option all one loss is the premium paid. Yes, Javid, try to see how much you paid as premium and check how much the stock has lost, and you will find that your premium is more. Okay? Your premium is more than what the stock has been doing if you put stop loss. Okay? So this, Javid, you need calculations. Okay? So I'm not trying here to give you calculations very detailed, but you can see my training, which is training level 14, how to trade calls and options. I will give you the basics, and I will give you the Greeks. Now these Greeks will tell you about a lot of things, about interest rate, about delta, about mega, and about the other stuff. Okay, so you will get some information, and you should go deep into all this. So B. Boyle Sinclair said, stock volatility is due to speculation. I love you guys. Yes, B. Boys, each trader in the market has an opinion. I think, for example, the stock is trading into a range, going up and down, so there is no direction. This is in general, okay? But the stocks I buy, I always buy stocks that go long, that go into a trend. If this doesn't go into a trend, I will exit them and buy others. This is what I do in my account. I don't care about if the Dow Jones is going down. I don't care. But there are other stocks that they go up. I buy them and make money. So I don't care what the general market is doing. Now, J. Rose say, easy work, thank you very much. Now we continue. C. Boyle, buy and sell. Ask, no bid, unfortunately. That's why I only use it to invest in index funds. So, B. Boyle, when you are buying index funds, you mean you are buying ETFs, right? But you should know, if you don't want to know, if you are going for long, like let's say you are an investor. Here, an investor, it doesn't matter that much. A few cents from the bid and the ask. But for us, like swing traders, because we don't invest, we just buy. If, for example, I buy stock right now and I don't feel that it is good, I sell it. The bid and the ask tells me how much I lose, because this money is taken by the market maker. It's not taken by the broker. Okay? Understand that there are two guys who are taking our money. There is the market makers and there is the brokers. The broker, he takes only commission. But between the bid and the ask, if it is large, who will take that is market makers. Market makers are the people who make the market move. And Kate Cola, percent is okay. Thank you very much. Now, Kate Cola mean the percentage, it depends on how much money you have. If I tell you I make 62%, okay, it on how the account is. So each person is different from that. But thank you very much for asking the question. I am always here to answer, but sometimes when it is something very, very private, I will not share private things, okay? Except the IRS, that you make a profit, you should pay tax. That's it. So, Empty Sky, how are you, Empty Sky? I haven't seen you for ages. Thank you for coming. So, another, please, for your questions, I am going from the top, going down. So, please bear with me, guys. If you ask the question, I will be answering it. Don't worry. Trump said, why do you analyze the market? How about the 670 companies? No, Trump. We do a search according to criteria. It's not 670 stocks that we have in the market. We have many thousands of stocks and ETFs and mutual funds. We have about 24,000 mutual funds and ETFs and stocks. So it's not only 670. From where do you get this 670? So we try to filter them according to our criteria. I told you many times, Trump, we use my criteria from the stock screener. Then when we have this stock list, we put it into a chart and we begin we begin looking, analyzing the chart. If you find one which is a good chart according to other criteria, we buy the stock. It's very easy. And the Trump, I told you many times, try just to have the subscription for 1 month or 2. You understand what we are doing, and that's it. And when you come here, you will be understanding everything what we are talking about. Trump said, will Facebook rally after the big drop? Who knows? I don't know. You asked me about the future. I told you I don't know the future. If you are asking me, do you buy now Facebook, yes or no? I'm telling you, I will not tell you this information because it is part of my training. It is part of my training. I can't tell you yes or no. So, hey wise man, how are you? Thank you for coming. I have wise man. I have changed the time to 9 o'clock. It is just because some people, they told me if you can make it earlier, because 11 o'clock some people go to sleep. And tomorrow we have what we have Easter, so it is a holiday. So that's why I want just to hang out with you guys early, and then you can sleep early. He says, Wiseman says, hello Karim, sorry I am late. No problem, no problem. We are just discussing discussing the signals, secrets, and swing trading. And as usual, if you don't get the information, you can check it tomorrow, and you can just browse the video, and you can see maybe some information. Thank you, Wiseman, for coming. Now, Trump has asked another question. According the earning of Facebook, will Facebook goes to all-time high again? No, Facebook. No, Trump. I don't know. Okay, I don't know if Facebook will have the good earnings or bad earnings. Okay, so I don't know. It should be, you should see the price when the announcement of the company is saying, and then you do that. Now, another question about Trump. Why most of you are a real target from heavy short sellers. This is most of the time, okay? Most of the time, what we call IPOs go down. Most of them, but not all of them. Okay? Even if there is a lot of buys in the market, or there are other mutual funds they can't buy before, because understand that some mutual funds they buy even before the market goes IPO or the stock goes IPO. Some they can buy before, but understand they don't sell. I think the rule is 6 months. But some people they are buying a lot and selling, and other people when they are selling, some short sellers come and they sell. So most of the time IPOs they go down, but the good companies they go back, because it is just a time where the people they know these companies and they know the what we call the earnings. Are they real making money, yes or no? Because there is a suspense, and people they don't want this to invest in a company when it is just an IPO in the first days. Okay, it's very dangerous, because you don't know, you don't have enough information, because each 3 months when we have the quarter, you will see that they announce information to the public, and you can go to the balance sheet and you see what they do and how much more money they make. Are they in trouble, yes or no? This is why the people they are not interested. That's why the stock is going down and short sellers come to sell short. B. Boyle Sinclair, he said, I don't fully understand how to hedge a trade. Is it buying a stock speculation is going to go up and immediately selling 50 or 70% of the same investment cost on your speculation increase in case you are wrong? No, you are speaking about hedging. What does it mean? This is in general what some people, when they think that the stock is going down, they hedge. I will tell you this. So please see B boy. So wait for me. I will just show you. Okay. Now, hedging, I will just explain what does mean hedging. So, let's say you buy a stock XYZ. This is a stock. This is an investment. Investment, what does it mean? It means you know the company. It's a good company. You know it. You check the fundamentals. The fundamentals, you check them. Okay. You check everything for investing. And then, let's say you bought the stock, as an example, you bought it at $20. Let's say it's going up for 1 year. Now the stock is $35. So you are making money. Now one day it stops and then it begin going down. So the people, what they do when it's going down, they hedge. They hedge, what does it mean? They buy here, they buy puts options. Now puts, what does it mean? If the stock is going down, you will be, if the stock is going down, you make money. So here, from your stock, here it's going down, you are losing money. Now you buy the puts, you are making money, and in general, you are equal, break even, or you don't lose that much. This is what we call hedging. But this is a very difficult thing. You need to make a plan. You need to do a lot of calculations in order to stay with this thing, hedging. Now, as an example, if the trend has been going up, what do? You sell your put, you sell it, and then your stock will begin coming back and you are gaining money. You gain money. This is how it works with hedging. But this I give you a simple thing to understand. Now, if you are interested, you need a lot of calculations to do it. Okay? For me, I don't do investment for many years. For me, we follow trends. We follow a trend. I will show you with another way what we do. Okay? So here is the swing trading. Okay? Let's say you buy at $20. You buy the stock. It's going up. Let's say 3 months. It stops. It's going down. Now, for us, since it's going up, we are making money in the trend, making money from the trend. Now, if the stock is not continuing to go up, go down, we exit here. Now we exit, we take all this money here. Okay, let's say here it goes to 40, and let's say we sold it at 35. So from 20 to $35, this is our profit, and we don't wait, we don't continue, and we don't hedge, we don't do nothing. We just exit. If the stock goes here, now it is $10, we don't care. We don't care and we don't hedge. And we are not interested in this stock no more. Here, for us, no interest. We don't follow the losers. And we don't make solutions to losers. If it loses, we exit. We find another one. This is how it works. Hope B-boy, hope you understand the way that we do business. So if you are interested, B-boy, I don't know if you are not my student. If you want to be my student, you can either order the training. Training level 1 is for free. If you want to order from 2, 3, 4, 5, 6 until 10, or you can take the golden subscription. It has 10 training levels for free. And we have the surge, and we have every lessons, and you can ask any questions. I make videos for you. So if you are interested to know my strategies, you should begin from the beginning and study, and then you will be okay with everything we do. Okay? Oh, where do you find my videos? So you have two choices. Either you buy training by training, training level 2, level 3, level 4, level 5, like this, you continue. Or you can just do golden subscription, which is $55 a month. And this is my website. You should go to it. And please go and check for 2 minutes or 3, and I put the website at the end of the page. Please go to it. Just 1 minute or 2, check it. And if you want to do the golden subscription, is better. Or if you want to do to do training level 2, then 3, then 4, then 10. 10 is the basics, you understand everything. And then from 11 to 20 or to 19, all these are for advanced students. When you get the 10, and then you can go to the others, like selling short, like buying from support line, like fixing your problems. All this you can do it later when you understand my strategy. So Trump said, why in some industries there is a solo stock that ignore the industry index and market overall? So thank you very much, Trump, to ask this question, because I have made, I think, a video about solo stock. It is about the buyers. Let's say a hedge fund or a mutual fund, a small mutual fund or big or whatever, he likes this company because he knows some information. He sees that the company is becoming, the earnings are becoming better and better, and this is stock, no one buys it, so he tries to buy it slowly, and when it's going up, everybody who are doing the same search as me, they will find this stock. And you buy it when other people, they don't know about it. It's about knowing when it goes. This is the signals I'm speaking about for 1 hour and a half right now. It means if you find the stock and you buy it early when it is at the beginning, this is what we call the signals that we search the stocks for. Okay? These are the signals. That's why some stocks, they do so good. Okay? But the market is doing bad. So, as I told you before, it is where you are in the market. It is not the whole market mood that will indicate that there is no stock going up. I will show you each day. If you search with my criteria, you will find stocks that are going up. If they continue with the trend, you will be making a lot of money from them. Okay? So, let's B-Boy says, what type of tax form do traders fill out? 1099, self-employment. I'm curious to avoid IRS. No, see, B-Boy, I'm trying to tell you something very, very easy. When the end finishes, okay, in January or February or March, especially in February, you should call your broker and he will give you your tax forms. They will give it to you as PDF file. I will explain here for you guys to understand how it works. Okay, so when you let's say 2017, you finished 2017. Now we are in 2018, and now from beginning of January or February, you should call your broker and tell him about your tax papers. So you will find it as a PDF file. Don't worry about this. Now, this PDF file, it has all the tradings that you have done, all the trades, it means buy and sell, everything you do in 2017, everything. Now, this PDF file, you should give it to your tax preparer. And don't worry, he will do, tax preparer or the CPA, your accountant, it means the person who does the tax for you. You just give him the PDF file from your broker. After calling your broker, he will show you where to find these tax papers, and you give it to the CPA. If you have made money, if you have made money, this money that you made as a profit, it will go to your income, and it becomes an income. It means you will get tax on that. Now, if you lose, you can claim $3,000 as a loss if you have lost 3,000 or 2,000, 1,000 or more, and this will be cut from your income. It means the government or the IRS, since you are losing, they will not tax you on this 3,000 that you lost. So let's say you make 40,000 this year, 2017. They will take 3,000 if you lost money, 3,000. So they tax you only on $37,000. Okay, so the IRS helps you, and they don't tax you that much because you lost. But if you make $3,000, it can go to your account and it becomes $43,000, and they will tax you according to your tax bracket, whatever is tax bracket, 25% or 30% or whatever you make money in the year. So hope it's very easy. Don't worry about this. It's just very easy. Just you get the file from your broker and give it to your tax preparer. Okay, so it's so easy. So don't make trouble with this thing. And in general, you have no trouble with the IRS, because IRS tries. If you make money, it means you need to pay tax. If you lose money, it will take this loss from your income. At least it will make you a relief. Okay, a relief, it means it doesn't make you another burden. You lose and then you pay more tax because you lose. Okay, so it's very good. So don't worry about that. Another question about Trump: why SEC to allow all companies to file secretly for IPOs? Well, what do you mean secretly? Trump. I will just try to explain to you this idea about IPOs. Okay, so bear with me. Okay, so this idea is very simple about IPOs. So here we have a private company and then here it becomes public. So private company, it goes to what we call underwriters, which are big. Most of them are big brokers and big banks. Big brokers and big banks, they try to have all the file for this company in order to make it later to get it public. So here, all these things is private. Why you are asking about this? You should ask only about when it becomes public, the first day, and they launch this stock. They give it a name, let's say XYZ. But some private companies, they can't go public because they have some issues. Maybe company they don't make a lot of money. Maybe they have some issues of loans. Maybe there are some specific things that the underwriters will see in this company. If it succeeds, it goes to be public, and then you should find XYZ. This is stock, and let's say it is $10 at the first day. This is how the private company goes to be public. But here, you are not concerned We are concerned here. We are the people here. We are the traders here. But here there is no traders. It's private. So I say, you said, why it is private? Because it is private. They can't show you what they are doing. The banks will not give you a report of this company that they become public. But they show this company that it is going to, because you will know it before it go public. Okay? So you will know about it. But the details, it's business. They will not give you details. So don't ask about details about other businesses. Okay? It's private. Now, hey, Wendy Casa, you say, hey, sorry I was late. No problem. I always try to change the time from 11 p.m. to 9 p.m. Eastern time, because a lot of people, they send me emails and they ask to change earlier because they will sleep at 11 or 12. So I'm trying just to find the good time for all you guys to be here. Now let's continue with our questions. I will see a Trump question before I go down. He said, in which sectors IPOs succeed the most? No one knows. You should go and check it. Take a sample. For example, in 1 month or 2 months or 3 months, you can go to Yahoo and it will show you what are the successful companies and what are the worst companies. You can do a search and you can find. But this will never help you trade them. The reason for that is that no one knows. It could be technology, it could be a bank, it could be retail, it could be whatever stock. But the good thing, if you use my criteria, it will show you those stocks, which you don't care about which industry or sector it is. Okay? It could be any industry, and my search of IPOs, I always search, I find stocks and I buy them. But for swing trading only. Okay? So, Juan Di Casa said, when the stock is trending up, are you putting trend stop losses? How do you calculate stop loss? So, Juan Di Casa, I know you are my student. Please go to training level 7. You will find all the information how to follow the uptrend, how to do a stock, and there is a trade that I have done, 2 or 3 trades with Twitter and one another trade with Osur. You will find it there, and it is 5 months, 2 weeks, and I'm following, and I'm using the exit, which is a stop loss. How to change it, how to move it. When you think that the stock will never go up again and it's going down and you should exit. So, Juan Di Casa, all this information are found in training level 7. So, go to your training level 7, study it very well, and then if you have questions, you just send me an email. Okay? So, because here, Juan Di Casa, I am not giving my training here. So, it's not explanations. I'm just giving the general ideas that I use in order to get the signals and in order to follow the trend. Thank you very much, Juan Di Casa. Hi, Briley T. Good morning. Thank you very much for coming. Briley asks, which one is successful trading for intraday trading? Now, Briley, if you are interested in day trading, you can check. I have 2 training. One is going long. It means day trading going long. It means in the day. Or when you sell short. There are 2 trainings. You can check them. You can order them and you can study them and you see all the techniques. This is training level 11, training level 11 and 12. Training level 11 and 12. You can begin with 12, which is how to day trade using the chart and candlesticks. So I will and the website, my website is Djellala.net. You can go just click Djellala.net and you can see training level 11 and 12, and I will just go and show you. Okay, I will go just show you. Okay, this is my website. Okay, so you can go directly to trading by videos here. You will find all the videos here, all the training. Training level 1 is for free, and you go to training level 11, how to sell short a stock, and training level 12, how to day trading using candlesticks and the chart. And there is still the discount. There are still discounts. Please, when you click anyone, it will give you the 70% discount. So just try to order them and then you have them. But understand that we do here mostly we do swing trading. Okay, swing trading, it means you buy today and you stay few days or few weeks or few months in the stock until you get enough money and then you sell. This you can get all this information. You can begin with training level 1, which is free, and then you can order until 10, or you can do golden subscription if you like. Golden subscription, you have 10 for training for free. So check my websites, and if you have question, please ask me, send me an email, and I will help you with whatever you want. Here is the email. Okay. So really, thank you for coming, and thank you for all your questions. Trump said in February and March was heavy selling off, big selling off. What do you think? We aren't in bear market and we didn't have it for a long time. Now, for me, I'm speaking about the whole market. I'm not speaking about the technology stocks. Okay? And technology stocks, we have a lot of industries. So it depends. When you say bear market, it means they will continue going down for a long. Maybe they lose 50% or 60% or 40%. Okay? One Dicasa said, B-boy say, if I do the monthly payments, do I get? No, see, you get, if you do golden subscription, you will get 10 training, the first 10 training, because they are the basics. The others, they are for advanced students, not now. You can order what you like because you can't get everything and you don't need them. Okay? So, thank you very much, Briley. Thank you very much. It means depending on what the trader is going to do, because from 11 to 20, there are different training that are different. For example, training 11 and 12, they are for day traders. But trading and going long in the day and selling short, this for advanced students who want to go and to do more about day trading. But if you are interested in swing trading, it's from 1 to 10. Okay? And later you can choose whatever trading you want, or you can ask questions in the subscription and I make videos for you. Because those are for advanced students. Thank you very much. And welcome for asking me questions. Trump said the bear market will last for 1 year or 1 year and a half. You will never know. Why do you say 1 year, 1 year and a half? How do you know it is 1 year, 1 year and a half? Because sometimes it is 1 year, sometimes it is 3, sometimes it is 2. It depends. So no one knows how much is it. And this doesn't mean that all the stocks will going down. As I told you before, there are some stocks that go up and they make good in bad time. So B. Boyle said, where is hedge fund risk management? Trading 11 to 12. Oh, you are meaning if you want to do risk management. So risk management, you can see it in 8 and let's say 8 and 19. Check this 8 and 19. 8 is how to minimize. I will make a clear here. Okay, so 8 here, how to minimize risk and maximize profits. This is where you study how to minimize risk and maximize profits. Okay, but this has no relation with the hedge fund. So maybe you are mistaken again with the hedge fund. Okay, and or you can use 19, how to manage your trading account. How to manage your trading account. It gives you a lot of things to minimize risk, and you can check them in order to get this information. But understand, so the thing is here, don't be mistaken with what we call hedge fund. Okay, hedge fund is not hedge fund managers. For example, hedge fund manager is a manager who trades in this hedge fund, which is a fund which is just money collected from the rich people. Okay, this fund, we have here rich people and wealthy people. So rich, sorry for that, H, and wealthy people, they give money to a manager, and this is called hedge fund. And this hedge fund, he will go long and he will short stocks. But what you are talking about is hedging. Hedging is just the idea of buying puts. Buying puts. If the stock is going down, you buy puts. This has nothing to do with the hedge fund manager. So you are mistaken. Don't be mistaken in these two things. Hedging, it is just a technique that we use. Okay, so I will make it clear. So hedging, okay, just an example. Hedging is a technique to be used, a trading technique. Okay? If the stock you own and you want to stay owning this stock, you don't want to sell. When it's going up, you are okay, you hold it, and even when it's going down, you hold. But since you are losing money when holding, you go and you hedge by buying put options, contracts. Now these puts, when you buy one contract, if the market is going down for this stock, it's going down, this put is going up and you make money from the put. You make money. This is what we call hedging. Okay? So it's just a technique that we use for to hedge. This if you are an investor. But for me, I don't do hedging. I don't buy puts when the stock is going down. I exit. This is where I exit. I exit the stock. I don't stay. So hope you understand this thing. Yes, this is what I explained, B-boy. Is to hedge is just to buy puts. But it doesn't mean that you are going to, it is just to be near to break even. Not to lose that much money. You can lose money, but it's not you are losing too much money. Understand that when you buy a put, there are puts for 1 month, for 2 months, for 6 months, for 8 months. What if you buy a put for 1 year, and then the stock goes 2 months down and then it goes up? So you should sell the put and that's it. If it goes again down, you should buy a put again. So you see, there are a lot of things that you should calculate, and it needs time to calculate all this. You can try it with a small stock. Don't buy too much. You try to do it and try to make calculations, because puts at options, they are volatile. They are not like the stock is going $1 and the put it will be going $1 up. It's not the same. So puts are, when they go up and go down, is different from a stock. So it needs a lot of things from you guys to work on this. And for me, I'm telling you, B-boy, I don't do hedging. We are doing swing trading. Swing trading is easier. If the stock you make money and it's going down, you exit. You get rid of it and you buy another stock instead of staying with the loser. And you become making solutions to this loser. What if this stock will go bankrupt? The company is not doing good at all. So what do? Are you going to stay the whole life with this loser? So here are these questions that you should ask yourself what to do. You should make decisions. So it's not easy. You should make decisions, because when you invest for the long run, you have a big risk if the stock is going down and you are losing a lot of money. And if the stock is going down, you will never know how long it will go down and stop. It could be 1 month, it could be 2 weeks, it could be 6 months, it could be 1 year, it could be many years. So this will depend on your strategy, are you investing, are you day trading, and so on. So try to understand that. And B-boy, I know you are looking for strategies that doesn't make you lose a lot of money, but understand, when you buy, whatever you buy, you have a risk to lose money. Okay? For us, we make it easy for us. We buy a stock. If it goes for 2 months or 3 months or 6 months or 8 months, it goes good. Whenever it goes down, we exit it. It's very easy. But you need techniques. You know, it's not easy to make it because you need techniques. You need to study. You need to practice. And you can practice from now. Just go to golden subscription, subscribe, begin your training level 1, 2, 3, 4, 5, and you begin to practice. You begin to search, you begin to put stop loss, you follow the stock, how to make a portfolio, and you can make a lot of money doing this stuff, but you need to practice. Okay? Because you have theory, you have the practice, and you have a model. And then whenever you have questions, you ask me questions. I will make videos for you, and you put it in subscription, and then you watch them. Okay? If you are interested just to buy the training levels, you can begin with training level 2, and then you continue until 10, and these are the basics of the strategy. You will find almost everything you need to begin. Okay? So, as I told you, for the signals secrets, I will give you some information on how things work. Okay? Now, let's see what is these signals that we always speak about. Okay? So the signals, what does it mean, this signal? Now the signal, it means in general, it is the momentum. Now what does it mean, the momentum? It is the first day the trend begins. This our momentum. So a lot of people, they use a lot of what we call indicators. You can go online and you find momentum indicators, and you find signals to buy, and you find, but it is, those are, each indicator is a small strategy, and you will be misled. You will be misled and confused because of this, of these strategies. But for us, we don't use indicators, but we use something very different. We use criteria that it is not. This criteria, we have 2 criteria you put in a stock screener. It's a free stock screener. And then you find a list of stocks. Let's say you find 30 stocks. And then these 30 stocks, what do you do with them? You put them into the chart. You put them in the chart. And we have other criteria to look at the chart. Other criteria. And this criteria will determine what is the good stock to buy. This needs experience. It needs practice. And it's very easy. It means whenever you get the 2 criteria, you have the stocks, you put them in the chart like this in your portfolio, 1, 2, 3, 30, and then you begin to see one after the other, and then you will see one after the other, and then you buy 1 or 2 or 3 before 4 p.m. Let's say at 3:30, you buy the stock and you put stop loss. This is how we get the signals. This is how do we work. Now all these, you find them from training level 2 to training level 4. So 2, 3, 4, all this gives you all this, and this is the search. If you want to order 2 or 3 or 4, or you can see silver subscription, and it gives you this for 1, 2, 3, 4, and it gives you a weekly search. I showed you how I search. There are a lot of things you can learn, and then you can do the same, and each day, daily, you will find stocks to buy and just have money to buy the stocks. Okay, so hope this this thing is understood. So we are in 2 hours right now. So please, if you have more questions or you inquire about anything about this signals. Now each trader has his own signals. For me, I teach or I taught these signals since 2010 until now. I find it, there are other signals that you can see them from when the market is going down. You can find other opportunities, and this is training level 13. How to buy from the support line. It is not easy. Those are difficult things. This training is very difficult, and it is only for those advanced students who can go long very good, and they can find stocks with what we call buying from support line. Okay, it's not any support line you can buy and you can succeed. Okay, so please, if you have more questions, you try to ask right now. If not, we will be ending this session. And I understand tomorrow is a holiday. It is Easter for you guys. So happy Easter, and have fun with holidays. At least you will stay. And Monday will be the market, and we will see that. Okay? So for those who have still some questions, please, as always, try to ask me, to send me emails. You find my email always in the website, in the stock market. Now, Wanda Casa say to me, Amazon stock comment. So you want to give you an opinion on Amazon? Okay, let's see. Let's see Amazon. Okay, as you can see, Amazon has a gap down, and it has another. So this stock, I have no idea. Okay, so are you telling me is it a buy or is it a sell? The time is very difficult right now because the whole market is troubled, and it seems to me that that Amazon, okay, hasn't gone that much as the market. It just has a gap down. So you will see in the future, a few days or few weeks, what will happen. Understand that we have now, this is the resistance line, this is the support line, and we will never know, is it going to go down or to go up. Okay, and please, for Wanda Casa, please send me an email. I will give you more details, and you can check. Our signals. So you can send me an email and we can discuss this in private, because Wanda Casa, you are asking about details about the training, and we are now in public, and it is just a general thing. So send me an email and we'll discuss it later. Now, B boy said, how do you invest in index ETF? How do you claim your dividend? Okay, B boy, since you asked me this question, I will try to explain to you. Okay, so just bear with me. Okay, we are here. Let's go and explain. This is for all you guys who want to see an ETF. Now, ETF, what does it mean first? ETF, it is an exchange traded fund. Traded fund. It is just a fund. What does it do, this traded fund? It tracks an index. Okay? Index. Now, you should see, let's say you should go online, for example, the Dow Jones. What is the index ETF that tracks it? It is called the DIA. You should go into Google, put DIA stock price, and see if it gives dividend or not. I will try to see with you guys. Okay, so let's say DIA stock price. I will just let you know if, okay, okay, so let's go and check. As you can see, I searched for you guys. I searched for you, and it says here that the dividend yield is 2.05. 2.05, this is the dividend yield each year. Now, what does it mean? What does it mean for you? Okay? Now, if you buy the Dow Jones, the index, this ETF, which is called DIA, now each year, the whole year, is 2.05%. Okay? Let's say the stock is 200. So you will have 2.05 out of this $200. Okay? So this is what you get. Now, how do you get it? Now, this is sent to your broker when the money, the dividend is given. You can check that when the dividend is given, and you will find it in your account. As simple as that. Okay? So it's not a big deal. You will find it when they send it to you. You will find it. So you don't claim anything, because if you stay that long, they will, because in each quarter I think they give you 0.50%, because it is two per year. 2 per year, you can divide it into four parts. Each 3 months they give you 0.50%, and you will see it in your account. Or you can ask your broker when it is given, or you can search online where the dividend is given. It's very simple. So don't worry. So it's not that you claim it. No, they send it to you without claiming, because you own. Don't just you buy one day and you sell it. Okay? So this, they will not give it to you until you are into the record book of the company on that time. If you are interested, you can see training level 16, how to invest in dividend stocks. In my training, I will explain a lot of things. There are some dividend that you get taxed more than the other stocks. So you should know what stocks to buy, what stocks not to buy. There are categories. So if you are interested in dividend or to invest in dividend, you can check my training level 16, how to invest in dividend stocks, and the difference between dividend stocks and growth stocks, what is good, what is bad. I will give you all the information in that training if you are interested. Now Trump has another question. Trump increases attack on Amazon. Maybe algorithm increase their selling of Amazon. Now see, try not to put too much politics into the thing. It depends on mutual fund what they do. The mutual fund are holding Amazon, and it is a big stocks, 1500. I don't know if Trump, the president, he owns he owns some of Amazon or other stocks. Okay, but you know, a lot of people, they talk, and don't try to make money because the people talk. You can make money. What if the stock is 1500 and after 2 months it goes to $2,000? What do you say? Okay, so it's I don't feel comfortable when people talking online because I don't follow them. I don't follow Trump. What does he say about stocks? I don't care. What I care about is the stock. Is it going up or going down? Okay? It doesn't mean that this news will affect seriously the stock. Okay? But it depends on you. If you have an opinion and you want to sell short this stock, you do whatever you want. But understand that this is a big stock, and whenever it moves, it makes trouble for people. Okay? So this is in general about today. For all you guys who want to know the signals, you just go and see silver subscription or golden subscription, or you can just order the stocks. So there is another question. B-boy, do you trade cryptocurrency or only in stock market? No, I do only stock market because I know how the stocks move. Now in cryptocurrencies or internet stocks, I have made videos before. If you want to check Bitcoin, put Bitcoin in my channel. Okay, let's see, I give you this. Put Bitcoin in my channel and watch all these videos that I have made before. You get an idea. But I don't trade cryptocurrency. I don't do forex. I don't do options, and I don't do futures. I don't do them. I only do swing trading in stocks. Okay, so that is for everything I do, and I am specialized in swing trading because I have traded a lot, and I understand how things work and who are the movers up or down. So this is how I work, and this is how I make money from trends. Trump said, Kareem, have you ever bought an IPO in first day? Yes. Yes. I bought Facebook, Twitter, Alibaba. Yes, those I remember a lot because they were so famous, and I make money from them. But it is just the excitement of the day when it is IPO. It's just the excitement when you just begin. The beginning of the day, it will be very, 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 very volatile, and you can't use the what we call the stop order doesn't work. So the stop order doesn't work, so you put only limit order. Okay, you put only limit order when you want to do stop loss in the day. So it was very, very hard. Karim, what's the famous IPO going to market in the future? I have no idea. I told you Trump, that I don't know the future. I use signals. When the stock is good, I buy it. It is an IPO or it is not an IPO, I don't care. If the stock is going in my way and make money, I stay. If the stock is going down, I will sell it with a small loss. This is what I do in general. So West Place asks, what has been your largest drawdown last year? Largest drawdown? I don't have a largest drawdown. I have some losers, yes, but big losses, no. I don't play with big losses. But I have a lot of gap apps. This is the good thing. Okay, the gap apps makes the account go bigger and bigger and bigger because you make a lot of money. But I follow the trends. It means I'm not going to let's say the earning news is tomorrow. I buy the stock because of the earning news. No, I don't do that. I follow the trend. And if there is a gap up, it's okay. If there's a gap down, it's okay also, because it is part of the game. But I don't put all my money in my account in one stock. This I would never do. This is risky business. You are gambling if you put everything in one thing. Okay? So, B-Boy said, how do fund managers buy and short stocks? Is there a trend to follow to avoid getting eaten by the big sharks? I have a tremendous fear of market manipulation from ultra large investing firms. Okay, first, fund managers, you should B-Boy. Let's see. I will explain to you, B-Boy, before you finish. Before you just to explain to you, fund managers, how do we have, okay? So please stay with us, B-Boy, until I explain to you. You say, I have a tremendous fear of market manipulation. Okay, so let's go to the explanation. Okay, now the explanation. So see this. We have two kinds of fund managers. We have mutual fund. Please bear with me. I will try to explain. Mutual fund managers, and we have a hedge fund manager. So what is the difference? What is the difference between this guy here and this guy here? This is a fund, this is a fund. This is mutual fund, this is hedge fund. What's the difference? Mutual funds, they can buy stocks or everything else. They can buy and they can sell what they buy. Sell what they buy. What they buy. It means they buy, and then if they have something they bought, they can sell it. So they always go long. It means they don't go short. So they have only one direction. It means they go long, like in investing, go long. Now, if they want to go down to short something, they use put options. They can't use selling short. They use put options. Now, hedge funds, they can go long. Go long, it means they buy and they hold. Or they can do the opposite. They can sell short. They can do that. It means they hold a position where the stock is going down. So hedge fund, they have freedom to do what they want. Freedom. Now hedge fund, they have rules. They can't do short selling. They have rules. So understand that mutual funds are different from hedge fund managers. Here a manager is free, and this manager most of the time is working with private money, which is private money. It means with the rich. The rich, they give this manager money and he will work like if you've heard of George Soros. George Soros is a hedge fund manager. It means he is a trader. He can buy long and hold position for 1 year or 2 or 3, and he can sell short a stock. Even if he has billions of dollars, he can sell short. But mutual funds manager, he can't sell short. So no selling short. Because if they sell short, they kill the market. Okay? So there is no selling short. So this is the main difference. At least you understand the main difference, and then we can go ahead. So you speak about manipulation. Manipulation, what does it mean? Everybody is selling short. Whatever you want to do, you do it. Don't bother yourself about manipulation. For example, if you go and you sell short a stock, who cares? If you buy long, who cares? So don't care what the people are doing, because they don't care what you do. So stop thinking about manipulation. If you don't want to trade or to invest, don't come to the stock market. It's as easy as that. So either you accept the game or you refuse the game. If you accept the game, there is manipulation, you should accept it. So, do you think 1 minute or 5 minutes candlestick or an hour to find out the stock in trending? Oh no. 1 day casa. You are a student. You should begin with training level 2 and begin your education. Stop having 1 minute and 5 minutes and 1 hour. This is for day trading. Don't use that. I don't use it. 1 minute, 5 minutes, 10 minutes, 1 hour. This is for day trading. How do they trade? For us, we don't do that. If you are interested in day trading, you can go to training level 11 and 12. 12, which is how to day trade using the chart and candlestick. You will find how to day trade with 1 minute, 5 minutes, or 5 or 10 minutes. You will find techniques, how to day trade, and you can begin to practice them. But since you are going to do swing trading, you can begin with training level 2, 3, 4, 5, 6, 7, 8, 9, 10. This you will find it in your subscription. You begin your studying. If you have questions, please send me an email. Okay? So there is no, you can't find a trend with an hourly rate, an hourly time frame or whatever. So don't use that, because I don't use it. If you have read or you have seen other videos telling you should find a trend by 1 hour, it's their problem. So I don't do that. Okay? So Trump said, do IPOs gap up? Can you buy them after gap up? Yes, the IPO, they gap up and they gap down. You buy them or not? I don't know. There should be techniques to know if you buy them or not. And even if you buy or not, you should wait for a few days and you see if you are correct or you are wrong. Because we use Trump, we use probabilities. It means if I buy a stock and it doesn't go up, it goes down, what should I do? I exit the trade with a stop loss. You can't force the market because you buy it, it should go up. No. So we are using what we call probabilities. And these probabilities help us make money even if you lose some money. Because not every stock that you bought will be a winner. There are some losers. B-Boy said, do you have a strategy to avoid minimize losses when whole market crash like in 2008? I am a very young investor. Yes, B-Boy, you can go to training. Let's see, show you. Let's show you, just to understand. If you are an investor, okay, if you are an investor, you can go here to training by videos. You click on that. Now you can go to training level 18, how to short the whole market. You use ETFs. This is when the market is the whole going down. You can short the indexes, and this is the training. It's training level 18, how to short the whole market. You can take this training and it will give you how to short the whole market using ETFs. This is not selling short. This is just shorting the whole index or indexes. So don't confuse yourself with selling short. Okay? So since you are an investor, you can do this, which is better for you. It is better than to use what we call puts options. So try to see that training. Okay? And there is a 70% here. It's not $100, it's only $30, and you can buy this training. Okay? And if you have questions, you just ask me. Okay? Now, another question. What I meant by drawdown is, did you make profit every month? And if not, what was the largest amount your account decreased from the beginning of the month to the end of that month, percentage wise? So for me, I'm telling you the truth. I see the yearly amount. I don't care about the month, because the month you can go 2% or 5% or 7%, and then you can gain that and you can make more money. So I'm not trying to see my performance each day, each week, each month. Okay? Because this doesn't mean nothing. You can lose 5% this month. Next month you get 15%, and you will cover your loss and your account. For me, I want to see if my account is on green or on red. This is the most important thing, and I will check. There is monthly performance, there is a yearly performance, and there is a daily performance. For me, most of the time I see the yearly performance, because it gives me in general how much I am making. Because in each month it can go down, go up and down, and it depends on how I trade. I am taking too much risk, or I am taking medium risk or less risk. It depends. For you, for example, in your account, you should see that. Well, what kind of stocks are you buying? Are you doing risky trades? If you are doing risky trades, you will see your account move so fast down and up. You can lose 10%, 20% if you are doing very crazy trading and you risk too much. And then you can see 10%, 20%, 30% up in 1 month or two, because you are doing very risky trades. For me, I'm trying to do medium, not very risky, not very slow. So medium, I can lose something, but next month or the other month I can bring it back, and I'm okay. But the yearly account, the yearly percentage makes me see where I am going. Now, is there more money in day trading or swing trading? It depends. It depends on how do you trade, but in swing trading you don't work that much, because in day trading you should work hard for your money. In swing trading it's so easy. You buy a stock according to my criteria. If it goes up, you hold it. Then after a few days, few weeks, few months, you begin making money. I'm not going to watch my my screen each minute to see if I am making money or I'm losing money. This is why day trading is it needs a lot of work. It needs a lot of work. You should be there in the market in the morning daily. Okay? But since I am not a day trader, I don't care. But for you, if you like day trading, you can try day trading. Okay? And another thing about day trading, you will trade a lot. When you trade a lot, you make a lot of commissions. If you use the margin account, you will make a lot of fees. This will make your profit smaller and smaller and smaller. That's why for us, we are doing swing trading, because it is easier and it is more comfortable and you have more time. For example, when you have a job or two jobs, you can even do swing trading without any problem. Okay? Now, Westplace says, the reason I asked about drawdown is because I had, for example, 9 trades, 5 of them I got stopped out, and the others are trading into a range, so my account has been down about 7% for the month. It's okay. 7%, it's okay. It's okay. Try to see those trades that you are in. If they don't reach your stop loss and your stop loss is good, you just leave them for 1 week, 2 weeks, 3 weeks, 6 weeks, until you see where they are going. If they change their mind and they go up, you will be making money, and you will get back your money, 7%, and then you can make more money. Okay? If you exit a lot of trades, you try buy others, because you will never know where you get winners. So don't expect that when you buy this month you will have more winners than next month. You will never know. So continuing trading is very good always. If you see that always that this month a lot of trouble, so limit your trading until the market, the whole market becomes better and better. Okay? So B-Boy said, is day trading dead due to a high frequency trading? Yes, there are a lot of troubles. A lot of troubles, because there are true that some people use algorithm, some people they use trading softwares, and this is a mess up. But don't think that those people are making money. No, it doesn't mean that. It means the stock market will become more volatile. I have seen, for example, a stock have 4 or 5 directions. It goes up for half an hour, it goes down for half an hour, it goes up for 2 hours, then it goes down for an hour. So it's a lot of volatility. And this lot of volatility, it's very hard to make money. That's why you are struggling with professionals. They have big money. There are a lot of people who have millions of dollars. They trade. If the stock goes just 20 minutes, they sell. 20 cents or 5 cents, or because they buy thousands and thousands of shares. So they can make money easily because they have big accounts. Okay? But for you, if the stock goes 10 cents or 20 cents and you don't buy that much, you will not see that much money. So this is the difference. So Trump said, B-Boy, no, just have to know the right setup and not use stop loss very often. Okay, so Trump, you are advising him not to use the stop loss. So please don't advise anyone in my live session. If you don't use a stop loss, you will get hurt. Those people who don't use a stop loss, they have stop loss in their mind, but they don't put it directly, and they are watching minute by minute. When they reach the price, they sell by market. So it means they are always having stop loss where to exit. It's not you buy a stock and you leave it for the whole day, and then you come at the end and you say, oh, is it going up or is it down? Okay. In one day, you can lose $10 in one day, or $20. So if you leave your stock, let's say you open a position, a day trade in the morning, excuse me, let's say you close your account and you go shopping, and at the end of the day, you come at 3 o'clock and you see what the stock has been doing. This is a stupid thing. This is not a trading. You are doing high risk trades. Because who tells you that the stock will be going down $10 or $20? Who tells you? So Trump, try not to give advice here, because it's against the thing. Trump said, Karim, do you cry where you lose or no opportunity to make a big money profit? No, it's the opposite. When I don't make money or I have a gap down, I will be happy, because I understand this is just a trade. You should not be emotions about the trades. A trade is just transactions that you do. Transactions. You buy and you sell, you buy and you sell, you buy and you sell. You have strategy to follow and you buy and you sell. I don't care. If I have a gap down today, maybe next week I have a gap up and I will make my money back. But this, if you know how to trade. But the problem, if you don't know how to trade and you have a lot of gap downs and you have a lot of losers, and you continue by the end of the year, your account is wiped out. I have been trading since 2010. Now it is 2018. Okay? So since I am successful in these years, it doesn't mean that come 1 year and then you lose. No, because I know how the market is going and I know the probabilities that I'm doing, and this is how I make my money. Okay? So when I lose, it's the same as when I make money. One time I bought a stock $78. Next day it is $135. I double my money. But is it a big surprise? A big happiness? No, because I know that later I will be losing some stocks. You see? So this is a kind of probabilities, and I don't have feelings for my stocks. It's just a way I make money. Okay? So Trump said, why some IPOs don't post all the information regard EPS, sale? No, they put. The IPOs, when they go public, they publish their... You can see that it's very easy. You can see, you go for example to NASDAQ or to NYSE, take the stock and see on the left side, it will show you all the information you need to know. Okay? If the company is public for 6 months, 1 year, it will publish by the law. If it doesn't publish, they will take it out of the stock market. Because what does it mean public? You should understand Trump. What does it mean public? Public, it means the company is obliged to show their business, how much it makes, how much it lost, what is their loans, who is the major holders of shares of this company. For example, if you want to go to Facebook, they will show you who are owning Facebook, the real owners and the other mutual funds and the people, and they will show you or brokers who own stocks, they will show you. So it is all shown. B boy, do you trade penny stocks? Yes, I trade all the stocks, but penny stocks you can check training level 10. It gives you specific information about penny stocks because they are different and you can find with my strategy searching, you can find penny stocks, whatever price you like, under $5 until $2 until $7 until $10. How many positions do you generally hold at one time? It could be 10, it could be 15, it could be, depends on my account. But I always have stocks. Always. In good time, in bad time, I always have stocks. Always. B boy said, pump and dump versus stock manipulation. What is the difference? Now, pump and dump scheme is a kind of manipulation, but it is clear. You will see it. So let's see if I can find the pump and dump scheme. I will show it to you. Okay. I don't know what happened to this chart. Is going up, but let's go to the chart and not this one. Let's go to internet. Let's see if internet we have pump and dump scheme. Yes. See this stock, for example. Let's see if there is. Okay, here. Now you can see this. You can see this is called pump and dump scheme. It means the stock goes up suddenly. Here we have, for example, the volume is 235,000.4. The stock was $1. The next day it goes to $3.16. And then it goes down. So there is manipulation here. Now here there is manipulation, but when these two manipulations here, one, here we have two, when the manipulation stops, the stock will go down as it is before. So here it is $1.03, here it is $1.07. So if you put this line, you see, it's the same. And this is a manipulation. This is a manipulation. Let's see if I find another example to you. Let's see if I find a big manipulation. Okay, so those are not so good as examples. I will show you. Yes, this is stock, for example. All what you see as a big candlestick here is kind of manipulation here, because the stock, it has no trend. It just go up. And it is not because of earnings or because of the news. No, it's just manipulation. Let's see here if I find another big example. Yes, this is a good example that you can see. Let's make it clear. So this is a same example. Now the stock was 20 cents. The next day it goes to $1.45, and then it goes down until it ends to 47 cents. But the last day, or the previous day, it was only 20 cents. Then it goes to $1.45. It means, what did happen here to understand what is manipulation? Manipulation is where some people, they buy here and they ask other people to buy on this day. So when the people they buy, these guys who buys here, they will sell on the top here. This is what happened. And this, it could take even few minutes, 1 minute or two, it goes to 3. And then after that, it goes down. So this is kind of manipulation that I'm speaking about. And this is not news, like earning news or so. So, this is what we call manipulation. So pump and dump scheme is a kind of manipulation in the market. But you can see it, it's very clean, you can see it, and you can see the volume. The volume is very low, and then it becomes millions. From where these people they come? No one just they come to trade a stock just like that. But when the people are asked to buy something, it goes up. So this is kind of manipulation. B-boy, do you have strategies to find pump and dump schemes and write them? No. But I have strategies to find good penny stocks. I will tell you how it works. So this maybe you will be interested in. Okay. Let's say by my strategy, I find a stock, it is $1.50, and I bought it today. Now the stock is going up. It goes to $4 after 3 months. This is just an example, okay? So, and then it's begin to go down. So I sell it. Now, from $1.50 to $4, this I follow a trend. Although it is a penny stock, but it has a trend, and then I sell it when the stock is going down. Okay? So this is not manipulation. These are people or mutual funds or whatever who are buying. And people, they discover here, they buy, here they buy, here they buy, they buy, and they buy until the people begin to sell heavily. When they begin to sell heavily, all the people will sell, because it's like something people are. If the stock is going up, you hold, and this is what we do. But this to find here. To find this signal, this is what I teach, is to find this signal here to buy. Okay? So, these penny stocks are not pump and dump scheme stocks. Are not. These are normal penny stocks. Normal. It means they trade as any stock. They are going up, and that's it. Okay, so this is how do they do. So my strategies, as you say, is to ride these trends to make money. I am not interested to find the pump and dump scheme and go into this, because a lot of people, they have a huge money, 20 million. Or maybe 100 million. There are some people that are playing with big money. If someone guys who has 20 million and he see that this penny stock is going up too much, and then he comes and he short it, he will beat all these guys who are buying long and he will beat them up and he will be making a lot of money. Okay? So understand that these are volatile stocks when they are into this scheme. And when the stock is going up, it doesn't mean that it will take the whole day. No. If a stock from $1 it goes to $3, it is in matter of 1 minute or 2. Don't think that it is the whole day going up. No. Because a lot of people on the same time they buy, the stock will rocket up. And if you want to find this pump and dump schemes, you should use volume, and in the morning you follow the volume, small stocks with high volume. That's why I told you I don't do day trading. I don't follow this, and I don't have time to do this stuff. That's why I don't do that. For me, why should I fight with other people each day? For me, I buy a stock, I leave it 1 month, 2 months, 6 months, 7 months. I make my money and I exit with a profit. Okay? That's what I do always in my trading. So I don't follow exceptions in the market, because a pump and dump scheme, it happens sometimes, most of the time, in 1 day. The whole year it happened on 1 day. So why should I follow these stocks until I find one stock? For me, I find good stocks daily. This is the good thing I am searching for. Stocks that go up. I find them daily. Why should I go and search for pump and dump scheme and try to be a day trader? I am not a day trader, and I don't waste my time doing day trading. But you, if you are interested, okay, if you are interested, you can do day trading. You can search for these stocks, and you can have small amount of money and you try. And then you see the behavior and you follow them, and maybe you can make money from these stocks. But for me, I am not doing that. Okay? So B-Boyle, thank you very much for all your questions. And all of you guys, if you have questions or you forgot to ask questions, in each video I have on YouTube, you find my email, you will find my my website, and then you can send me this. He said, B-Boy said, is your penny stock strategy the same as blue chip stock trading? Yes, it's all the same. Anything that a trend, either penny stock or not penny stock, it doesn't matter. The only thing that you should look for is trend. Does the stock goes for long time? Do you make money from it? That is the trend. But in order to find these stocks, you should know how to find them. Because these stocks, if the stock has a trend, you see it, it means that it is not good to buy. That's why beginners, when they see a big trend and they want to buy this stock, which is false. Because when you see the trend, it will collapse at any time. Anytime it will collapse. So that's why we don't buy at the end. We buy from the beginning. And this beginning, it has criteria. When you search this criteria, you find them. We try to find the best chart, and then we do that. B-Boy said, what is the difference from an average trader and working for a firm? Most of the firms, they don't give their money to people to trade. Because the firms, if they are having a hedge fund, yes. A hedge fund, it means a person responsible for the trades, and the rich, they give you money. But for firms, it's rare, because they don't give money to their associate to trade for them, to trade for the firm. Because if it is a broker, it is making money from commissions and fees, not to trade them by themselves. Okay? And there are some traders who use a large amount of money and they trade, and because they work for these firms, but understand that those guys, they can lose a lot of money, but you know, the firms doesn't, it can fire these people. Okay, so they don't trust people too much, because in the market, if someone wants to trade for a firm or for like a hedge fund or something, it's not easy that the people, they give him money just to trade like that. Okay, it could be a loss, and this guy will not be responsible for the loss because he will not pay. Okay, because if he want to pay, let's say he they give him $1 billion. Just an example. This is a small hedge fund. $1 billion. What if he lost 10%? 10% is 100 million. Now this guy, he has no 100 million, so he go bankrupt and then maybe he go to prison. That's why those hedge fund managers, they don't accept the loss. The loss is on the people that give him money. So this should be a contract between this trader and between the hedge fund. The contract that it is clear and it shows the responsibilities, because no one will be doing that. How do firms make money if most of the firms are brokers? It means there are, let's say a broker, I will give you an example. Okay, so let's say here a broker makes money in many ways. One, commissions. Second, fees, like interest rate on the margin account. Okay, now they can make money by interest rate on the money that it is not traded, money in the account. Okay, they can help do big transactions, and they get big commissions. Okay, they can sell IPO shares. They make a lot of money from this before it goes public. They sell IPOs. It means the company, the IPO company, it sells shares to the broker, and the broker he sells to whom? To its customers, the big customers. He sells them cheap, cheap. And then when it goes to the market, it can become bigger. Now there are some brokers, they are like a market maker. It means they make money from buying and selling and making the market. So the broker can make a lot of money from different sides, a lot of things like this. So they buy and they sell. This is market maker. So they are making money from the bid and the ask. Okay, so these are some of the things that they make money, and you can just these things I'm telling you, it's very hard to find this information. Brokers and firms and banks, they don't disclose this information to you just to go on a book and you find it. Everything is a secret in the stock market. That's why it's not easy to get information. So this is the last question of B. Boy. How do firms make money if they don't trade? They can trade as market makers, as I told you. They can do a lot of things to make money. So it's not they make they will go and they make a firm and they begin to trade, because this, if they want to do that, there are they can give money to traders, but the responsibility will be on traders. I will give you one thing maybe you have heard of. Some people, they don't know about it. I will tell you this. If you guys, you have heard about, maybe you have heard about a proprietary trading. Now this, the broker, he gives money to customers. It means traders. Okay? And the thing is, they take only 10% of the profits. But the stupid thing they do to these customers or these traders, the loss is on these customers. Who will accept that? Those people who are doing proprietary trading, the customers, it means the traders, they think that they are good, and the broker help them with the training but all this at the end is not true, because if the loss is on the customers, okay, they should take 10 profits of you. They should never take profits. They can give you the money and they ask percentage. Okay, percentage like 5% or 10% or 2%. They ask you from the profits, not from the profits, but from the interest rate, which is different. Interest rate. Okay. So this proprietary trading gives a lot of training, a lot of stuff, but they don't use this training for themselves, for the broker. But he asks other traders to come and they give them money, and sometimes they ask them $5,000 to have a training, and later to choose them. This is all they want to sell training and for these customers, and they tell them that we will give you 100,000 or 50,000 or because the people, they don't have money. So all this is a new way to attract customers, to sell them training, although they don't use this training, because the broker, he will never trade. The broker, he knows that he will lose because he doesn't know how to trade. That's why he gives money, and he will play the game of the loss is on you, and he will take 10%. So the best thing, if you do margin account with interest rate, is better than to use this proprietary trading. This is in my opinion. Okay. Let's see. Ray Dalio says he does not invest in individual stock, but he is a hedge fund manager. See, you should understand what is a hedge fund manager. Hedge fund manager is a manager that has a fund full of money, and then he trade. If he doesn't like individual stocks, he can buy ETFs, he can buy mutual funds, he can buy bonds, he can buy annuities, he can buy all the products that are in the market. You are not obliged to buy stocks. Okay? So he will trade or invest for the long run for indexes, mutual funds, whatever, bonds, annuities, anything. And then after 1 year, if he made money, he will get a percentage of that, the whole account. That's why they make too much money. If they lose, it means they do nothing to them. They will not ask them to bring back the loss. They can't. Because let's say he has $10 billion. How much this Ray Dalio have? Try to see how much he has. That's like a fund. How much money? Try to see the rules. What are the rules, the contract that he made with this fund in order to run this fund, to trade? How much he get as from the profits? And if there is a loss, how much he loses himself? No, he will not lose. Okay? So try just to find more information. Be a boy if you are interested in all this stuff. But this information will never help you trade stocks, and it will never help you make money in the market. Okay? So we have another question. Chris Johnson, what's the difference between doing your strategy and just buying an ETF? It is a momentum fund that does what you do, but there is no taxes every time you sell. So first MTUM, I don't know what's this, but let's see. MTUM, iShares USA momentum factor. Okay. See, Chris Johnson said, what's the difference between doing your strategy? Excuse me. My strategy, it is not following an ETF, following an index. In index, you are looking for a lot of stocks in the same index, and you are following them. First, an ETF has fees. Try to check how much fees they take from this ETF. Now, but there is no taxes every time you sell. What is this? There is no taxes. Why there is no tax for this ETF? If you have a, please, if you have a link of information, you should send it to me, and I will study it, and I will let you know, because I don't understand why you don't pay tax. Okay? The ETF does not follow an index. It just buys the highest momentum stocks. ETF pays no capital gain when it buys and sells a stock. Do you have videos on buying bonds and securities and strategy in mind when doing so? Okay, Chris Johnson, I will take the information that you tell me. I will check and I will send you an email. Okay, so for that, okay, now for that, please, because I don't have your email, send me your email right now, and I will send you my email. This is my email. Send me an email, and I will check that and I will let you know, because this needs from me to check what is it and why you don't pay tax. Because selling and buying has nothing to do with tax. Tax is you when you make money. If it is less than 1 year, it goes to your income and you pay tax if you have profits. If it is more than 1 year, you will be having, I think, 15% as an investment. But for this ETF, I don't know. So I should see. So Chris Johnson, this is my email. Can you please right now send me an email? And I will try to see what's this ETF, because I will study what is it first, and what does it do, or something like that. Okay? So it's very simple. I will check that for you. Now B-Boy said, do you have videos on buying bonds and securities? No, when we say securities, it means we say stocks. No, I don't have I don't buy bonds. I don't have a strategy for bonds, because bonds have an interest rate, and it has a contract time, and it goes up and down. So I don't do bonds. I don't like interest rate. Okay. Videos on how to keep a balanced portfolio. You can check training level 8, which is how to minimize risk and to maximize profits. This is the training that speaks about portfolio, how to minimize the risk in it, how to maximize profits, and this it helps you understand the portfolio, because it depends on how much money you have. It depends on how many positions you have in the account. Are you doing risky trades or not risky trades? It depends on many things. So you should study this in order to understand the guidelines. Do you know anything about modern portfolio theory? Yes, I have studied those, but understand that any theory, okay, when it comes a bad year, if you don't buy puts, or if you don't short stocks, or if you don't short the whole market, it will be a bad year for you. What do you think about Warren Buffett? He is the most known investor. What did happen to his stock, which is Berkshire Hathaway Class A? It was 195,000 a share. It goes to, I think, to 90,000. He lost 50% of his money. So either you do modern portfolio or you don't do modern portfolio theory. It will never help in some bad years. So B-Boy said, is risk parity a myth? I understand what daily radio does, but it doesn't look realistic anymore since learning from you. I don't know, what do you mean by risk parity? If it is his, let's say his own notion, okay? Oh, yes, yes. I see here the risk parity that you are speaking about. It says it focuses on risk, usually defined as volatility rather than allocation of capital. Okay? So this means that some risk parity thing is going to buy more bonds, for example, and stocks, rather than buying a lot of stocks and just little bonds. But you understand that if you buy a lot of bonds, let's say you have 7% of your money, 7% in 1 year. Let's say the market gives you 25%. So what does it mean? It means that 25%, you got only 7%. And the market has given you 25. So you lose money when you do a lot of bonds. Bonds maybe in a bad year. Okay? You put more bonds, and if the bad year, you will make a lot of money. That could be a good thing. But in general, these theories, you will find hundreds of theories. Anyone gives you a theory, anyone gives you allocations, but in certain times, this doesn't work if you don't do something else. Okay? So this is what I'm saying. Yusuf, how are you, Yusuf? Do you trade forex? If not, why? With which market do you trade? What is your best frame you enjoy trading? Do you use trading stops? Now, first, I don't use trading stops because it is automatic, and for me, I should see where the stock goes in order to make a decision. So trading stops, I don't use them. I have my own way to follow a stock, and this is a training level 7, how to follow a stock, if you are interested to check it. Now, do you trade forex? No, I don't trade for forex, trading currency pairs. No. With which market do you trade, and what's your best frame? Now, we do here swing trading, and we use daily charts. It means each day is a candlestick. So we are using what we call swing trading, which is a short-term trading. It means if you buy a stock, let's say you buy a stock for few days, few weeks, or few months. It could be even few months, 6 months, 5 months, and you hold in the stock when it gives you your money. This is called swing trading, and this is what we do. I have some training about day trading if you are interested, but it is for stocks, not forex. B-boy, I am confused. Why do I need bonds? Never. Now, B-boy, you speak to me about risk parity that you are speaking about. You told me this, it's not me. You told me, is risk parity a myth? I told you, no, it's not a myth, but it can work in a bad year. Let's say in a bad year, like 2008. I will explain, B-boy, please stay with me. I will explain. Okay? So, in 2008, now, most of the investors lost nearly 50% of their money. Now, Warren Buffett, who is the most known one, he lost 50% of his stock, Berkshire Class A. Now, let's say in this year, you see the stock market is going down. You buy all your money with bonds, and it gives you 7%. So you will be, at the end of the year, you will be up. It means you are making money with bonds while the stock market is going down. So you understand now why bonds are good in bad years. Okay? But I'm not saying to you buy bonds. No. You can short the whole market. Short the whole market. You short indexes. And this is the training that I showed you in my training. How to short the whole market. Okay? So this is why I told you about bonds, because you say the risk parity that you speak about. Okay? So I hope you have enjoyed this session. We are in 3 hours 20 minutes, and Yusuf said, what is your thought about algorithm trading? Now, algorithm trading is based on math, and the people who are in the market are foolish people. They are fools. Okay? You can't control, you don't know how the people will react to something. Sometimes we have good news and the stock goes down. You will never understand why this is happening. If you follow your algorithm, it works in some time and it doesn't work in some time. That's why those people who use trading software, most of them lose a lot of money. They can't make money by a software because the software doesn't know what you think. The stock is going down if they short, and then after that it will go up. Okay? So it will be going up and going down and selling and buying. It will be a big mess. That's why some people, they create trading software and they rent them or they sell them. Okay? They don't care. They just make software with some criteria, a strategy, and they sell it. If it works, if it makes money or doesn't make money, they don't care if they have their money by selling or renting. Okay? B boy said, how do you know when to buy bonds? Is there a pattern to follow or just watch the media, or is it better to just short the index? So it is all up to you. You should get the training to understand what you are doing. No one will tell you how or where to buy, because you are just trying to have rules without nothing. When you say, how do you know when to buy bonds? I don't buy bonds. So I don't trade bonds at all. I don't trade them. The people, when they see the bonds, they think about how much they get from the bond. Like 7%, 10%, or 5%. They don't care about when to buy the bond or not. Okay? Now, watching the media, it means the media is just news. Okay? It will never give you money. If you follow the media, you will never make the money. Because someone says to you, they ask you to buy, other guys they ask you to sell, other guy tells you to hold, so you will be confused all the time. So to sell, to short the index, okay, there are strategies. That's why I make the training for that. So you should go to my website and see training. Now Yusuf said, all big constitution used to bot to trade. I think that is why when we have good news, the chart goes down. It's not what you think. News is, a lot of people watch the news and try to see if the stock is going down and the news is bad, they sell short. But there is no guarantee that the stock will continue to go down. Now, all the people in the stock market, they want a sure thing. There is no sure thing. So if you want to make a sure thing, it doesn't exist. So you are just wasting your time. the best thing you can do is you use probabilities that I use in training level 5. How to make money from stocks. This gives you the probabilities to make money and how to make it. Okay? Mahesh Kumar, he said, how many positions will you take in intraday? I don't do day trading. And you can't do mini trading in a day trading. You can do only 1 or 2 because you will be watching each time the stocks. So it will be very hard to you to focus on 2 or 3 stocks at the same time. Okay? So if you are a beginner, don't do 2 or 3 trades in the day. So don't do that. It's very overwhelming for you and you can't fix. For me, I do swing trading. Let's say I have 10 stocks in my portfolio. I don't do nothing. I put stop loss. If the stocks go up, I'm okay. I don't do nothing in my portfolio. So I watch them at the end of the day, daily. I watch what the stocks have done. That's it. But I don't go and watch every minute in every day. That's why I don't do day trading. So you understand why I do short-term trading, which is called swing trading. Okay? Do you trade with a news release? No, I don't. I don't follow news. My strategies don't follow news. Because if you want a news release, how many stocks do you have in the stock market? You have 24,000 mutual funds, ETFs, and stocks. How can you see news for all these stocks? How? It's too much. And even if you see good news, it doesn't mean that the stock will go up. It can go down. Okay? So there are a lot of things that you should see. So B-Boy said, so bonds are not a sure thing. I will explain to you one thing and then we can finish this. So, okay. So let's speak about bonds. Now, let's say you buy a bond. Okay. This bond contract is 5 years. Let's say they give you 7% each year. Each year they give you 7%. Let's say the price of this bond is $35. Okay. Here is the trick about bonds. The bonds can go up, let's say to 40. And they can go down, let's say to 25. So if the bond is going up, the percentage that you make will be good, will be better. Because 35, you get 7%. Now 40, you get 70%. So when the price is going to 40, you are making capital gain here and the percentage will be higher. So it is excellent for you. Okay? Now, let's say the bond is 35 and goes to 25. What did happen? You are still getting 7%, but you will be getting less money. Because 7% out of 25 is less than 7% out of 35. So you might be losing money. So bonds, it's not a sure thing. Because bonds, okay, it's not, they fix the interest rate. This is fixed. It doesn't change. But the price change. So it depends. So there is no sure thing here. Okay? Now, Yusuf said, What is your prediction 2018 stocks? Is it a good year to trade gold since the dollar index is weak? First, I have no predictions. I don't work with predictions. What I work with is probabilities, and I have screening stocks by search daily, and I find my stocks and I buy them. If they go up, I hold them. If they go down, I sell them by stop loss. For gold, are you meaning gold? It means you are going to buy stocks or to buy the ETF as gold. It all depends. If the gold, like ETF, it means that tracks ETF. I will show you the ETF of gold, which is GLD. Let's see. GLD is the ETF for gold. Okay. So gold is $125. So the gold, you see, it doesn't do nothing. It's going up, going down, going up. So if you bought gold here in 7 July 2016, it means more than 1 year and a half. You bought it at, let's say here, 129, and now it's 125. It means that all this period you had made no money, like let's say from here to today. So all these, you had made no money. This is, you are buying gold as an ETF. Okay? So what if you bought index of Dow Jones? Let's say we take the same period, which is 7 July 2016. Where is 7 July? 7 July. Okay, it's here. So if you bought stocks here 7 July, the same as gold, you see here Dow Jones was 18,000, now it is 24,000. So you will be making a lot of money by buying Dow Jones index, which is the ETF. Now if you buy gold, you will be making no money. Here is gold. Gold, you have been making no money. Maybe you lost some money. Okay? So this is just to show you how things work. Okay? Now, let's see, boy, is there such thing as a good year or a bad year for stocks trading? Is every year the same for swing trade and day traders for making money even in a year like? Yes. Understand that traders, they have many ways to make money. If you are an investor, you just buy long. It means you buy, you thinking that the stock is going long, is going up. But what if the stock is going down? What do you do? Now day traders and swing traders, they can sell short. When the stocks are going down, we make money. That's the difference. And you can make money each year. But people who are doing only investing, if there is a bad year, they will be hurt. Understand that Warren Buffett has lost 50% of his money in 2008. If the market has been going down, he'll be losing a lot of money. So try to understand that. Because he doesn't trade. He just invests. Jimmy the Greek say, how do you find the next Apple or Amazon or Google? It is by searching. Okay? Searching by my criteria, you will find IPOs. Okay? So you should either maybe take my golden subscription to find 10 training, and you train yourself to search, to find stocks and so on. But this is a short-term trading. It means for many days, many weeks, many months. Not investing. Because in investing, you will never know which one will be the best. Okay? You will never know. The only thing you know is you buy and you wait. And you can't buy the whole market. So you should just if you want to invest for the long run, you should see the company itself. Does it make money? Can it compete with competitors? Has it a long time in the market? A lot of stuff that you should check if you are going to be an investor. Okay? If you are going to be an investor. If you are going to be like a trader like us, so you should use what we use. Okay? Like short-term trading or day trading. But mostly for us, we do swing trading. B-Boy said, can you swing trade an index? Yes, but you can't buy the index. You buy the ETF that tracks. Okay? You buy the ETF. Each index has an ETF that tracks it. So you can't buy the index. For example, you can't buy Dow Jones, which is $24,000. You can't buy that. But you buy the DIA, which is the ETF. Okay? So is it understood? Jimmy the Greek said, yes. So you are a swing trader, chart reading candlestick. Yes. We follow trends. Okay, I will, Jimmy, I will show you in a moment what we do. At least you have an idea. Okay. So we are swing traders. What does it mean? Let's say you bought a stock at $20. This is where you bought it. Today, for example, today. Now, we put stop loss. Stop loss, if it goes down, we lose it. Let's say it is 19. Let's say the stock goes up from 20 to $75 in, let's say, 6 months. Just an example, okay? Now, this is the trend. This is what we do. We follow the trends. And then, when the stock is going down, we sell here. Now, all this process from finding the stock, putting stop loss, following the trend, selling, all this is training from training level 1 to training level 10. These are what we call the basics. Training level 1 is for free. You can get it right now if you want from my website. If you want all without buying them, you can go and do golden subscription and study all the material. Golden subscription. Okay, it is a subscription. And you find 10 trainings. Each training has a lot of videos explaining to you all the things that you should know. These are the basics of my strategies. And this is what we do. Here, it doesn't mean that it will be 6 months. It could be 5 days. It could be 3 weeks. It could be 1 month. It could be 6. It could be 9 months. So it depends in each trend when it stops going up. Okay? So hope you understand how do we work. And yes, we are using the chart. Jimmy, what are your thoughts on closed-end funds? So, see, for me, I don't buy mutual funds. I will tell you why. Mutual funds, it's a collection of stocks together. and you find the index, which is the average. And there is a manager who manages these stocks. He buys and he sells. But the problem is that there are fees, 2% or 3%. Each mutual fund has its own fees. So it is cut from the price. So each year, for example, it takes 3%. Each year, those stocks, they take 3%. Each year. For me, I don't want to buy mutual funds. Or sometimes ETFs for the long run. They take fees also, but it is less one than $1. That's why for us, we buy only stocks. We don't buy mutual funds. So just to make sure you understand what we are doing. Now, so please, if you have other questions, okay, please ask the questions. So I will give you my so my website. You can check all the training, okay? And I will give you my email. So if you have any questions after we finish this session, please send me an email. So B-Boy said, starting as a brand new trader, going through your gold subscription, when can I start trading myself? I want to start today. Please, what would you do if you were me in my position? What do I do first? Now, B-Boy, first try to take my website and my email, because we will continue this after you send me emails, and I will send you emails and we speak privately about this. So you should take my training first, because there are hundreds of videos to watch. It means it begins from the training level 1, which is free. You can take it right now, and then you do the golden subscription, or you can order a training by training. Each training gives you the things that you should know at first: how to search, how to use a stock screener, what are my criteria, how to find the good stocks. Okay, and don't be pushing yourself to trade very quick. You can begin virtually with the chart. You buy stocks according to my criteria, and then you begin trading. Okay, but don't just jump and put all your money in the market and you are just new. You should study first and practice. Now, if you have a question, you send me an email and I will answer you, or I make videos for you into the subscription, golden subscription. Okay, so please B-Boy, please take my website right now and take my email. Try to keep them, okay? And we will continue our discussion by email, okay? Because right now it's 3 hours 43 minutes, and it's time to stop the live session. Now I have a question with Jimmy, the Greek. Yeah, I have buying a closed-end fund that pays a 10% dividend plus going up in value, but I'm going to check out your website. Yes, thank you very much. But understand that the dividend is taken from the stocks, and even if it's growing, you should see how much they are taking from the fund, and see the stocks they own. Are they good or bad? Because they change them each year. They change them. If they own, for example, 20 stocks, try to check them. So Jimmy, you don't just invest in a mutual fund and you don't know how many stocks, what are these stocks, or what are the risks. They will show you the risk, and they will show you everything you want to know about the fees. So you should go to that. Which screen do you like the best? FinViz, Yes, very true. Good point. Yes, I use FinViz, and there are a lot of free stock screener. You can find a lot of. The best thing is you can use my criteria. So FinViz, yes, I use it. It's very good stock screener. Okay, and you should just you can have this or another one, but the best thing, I use FinViz in my training, and in finding stocks I use always stocks FinViz. There is another other stock screener that you can use, and all are good if they have my criteria. Okay, so thank you very much, guys. Please take my email and my website, and if you need help, just send me an email. I think it's time to finish, and thank you very much, all of you guys, Jimmy the Greek and B-Boy and all the guys who were here. And well, what is, you say the cost? The cost of what? The cost of training or the cost of FinViz? FinViz is a free stock screener. So the cost of what? Of the golden subscription? So you should write something. Oh, the golden subscription, it's $55 a month, and you get, yes, $55 a month, and you will get 10 training for free. If you want to buy them in order to keep them for yourself, you can check. There is 70% discount for training levels. For example, 2, 3, 4, 5, 6, 7. You just, if you want to buy them, you buy them with what you call with a discount, and you keep them. Because understand that when you are in subscription, if you stop your subscription, everything you have, it will be lost. But if you want to buy training by training, it's okay also. You don't need the subscription if you don't want to. Okay, and here is my website. You can check that. If you have questions, as usual, as I told you, you should ask me question by email. Okay, this is my email, and it's time to stop right now. Thank you very much for all this. Thank you very much, and I will be always on Saturday at 9 o'clock. So next week, if you have more questions, you can send me an email. This is better because I will respond very quick. If you want to ask me directly like today, we can have the live session as usual at 9 p.m. Eastern time. Okay, so thank you very much, and see you next week, and happy Easter for tomorrow or Sunday. We are tomorrow maybe now. Thank you very much, and have a nice night.